needs to understand. And today we are going to discuss about ThinkSabio, a platform which simplifies the stock market. Like you are going to, think you are going to shop in Amazon and there are thousands of choices before you and you don't know what to select, why and how to select. You will be in a need of guidance. Similarly, ThinkSabio too helps like in the stock market. There are 7,500 plus companies. ThinkSabio refines all these companies and gives you to best out of all those. ThinkSabio's intelligent research platform simplify your trading and investment decisions with data-driven insights, institutional trends, and advanced analytics. By using ThinkSabio, we can access to stock pricing, trends, and insider data, institutional data like 9,000 plus institutions data, which update on a quarterly and daily basis, which source directly from US Securities and Exchange Commission. And with all such detailed information of their buying and selling transactions, we make all these insights clear and actionable so people of every income and education level can invest wisely and model their success. So this is our ThinkSabio platform. In this, first of all, we need to sign up. We have 7 days free trial. Like for sign up, just we can sign up with with our direct respective Google account directly, or simply we can create an account by typing what is our name, email, and password, and then we will get one verification link. After the verification link, we can directly log in. Like I'm logging in.
Sorry to interrupt, buddy. I think we can skip this portion. We can directly go to the features because
Yes.
she's already excuse me, Dikshita is already logged in as a student, right?
Yes.
So we can directly go to the features, buddy. Sorry to interrupt. Let's utilize our time more effectively.
So this is our ThinkSabio platform. In this ThinkSabio platform, we have we have many things like institutional insights, stock level intelligence. There are many advanced market screening and research tools. Like in the US market, institutional investors drive over 70% of market volume. Understanding their movements gives retail investors a strategic edge with ThinkSabio. Like for the example to explain further, let us take any stock. For the example, let us take Apple stock. So here, if you see, here you are seeing something in red color and something in green color. So in green color simply means the people are buying it, and red color simply means the people are who are selling. The people who are selling, they are in red color, and the people who are purchasing, they are in green color. So here, when the people who purchase the stock will increases, then the people who sells the stock, then the stock will rise, and vice versa. Like the people, when the people who sells the stock increases than the people who purchases, then the stocks will fall. So here it's like a war. Here it's like a war. It's like a tick tack going between the buyers and sellers. So in the US market, most of this drive will happen with institutional investors. Like let's say retail investors in the sense individuals like me and you, we. If we want to invest in the stock market, if I want to invest in the Apple, or if any individual wants to invest in the Apple, how much will he invest? He will invest, let's say $10,000. He will invest $1 lakh. He will invest $10 lakh, or he may invest 1 crore. That's it. But if any institution wants to invest in Apple stock, it will invest in some millions and some billions. They will not invest in lakhs. So I mean, to be frank, like in stock market, a daily turnover of stock market is approximately some billions, some trillions. Like I had read some more than 500 trillions per day. I had read in some statistics. I mean, in all over the world, the daily turnover in the stock market is more than 500 trillions. So from when you see that such amount, from that such amount, the amount which you see like $1 lakh, $10,000, they are very tiny, very tiny amount. So here what's happening is, if an institution purchases a stock, then it will influence the stock very high. And the same, if the institution sells a stock, it will influence the stock. I mean, it will influence the stock to very high. So here, ThinkSabio, what this ThinkSabio website is doing is, so as institutional investors drive over 70% of whole market volume, understanding their movements gives retail investors a beneficial. So with this ThinkSabio, you get everything. Like here you can see individual institution report. Like here, you can see which institution we're investing. I mean, at what, I mean, at which stock institution and investing, quarterly top 25 buys and sells. Like if you can check here, here you can know, I mean, here you can know where on which stocks the institutions are getting interested in, on which stocks the institutions are showing are showing more of their interest. Like it see which hedge funds and institutions are buying or selling a specific stocks. Like as you can see here, I mean, top 25 quarterly institutions buys and sells. These are like top 25 stocks. So I mean, in this, I mean, as you can see, sold off. What does it mean? Like most of the institutions are sold off these stocks. So, I mean, it gives one hint that, okay, when institutions are getting, I mean, getting a fall from these stocks, so we need to, so like it's like a red signal for us. So, and sec filings, like uh, I mean, here we have individual statistical report. Like in this report, there are, I mean, we have several options. Like let's say, for example, just I take an example of Tesla stock. Like if I taken an example of Tesla stock, here I can find every information, every technical information related to the Tesla stock. Not only Tesla stock, there are some, I mean, we have data of more than 6,000 plus companies. For all the companies, we can get the data of everything. So like what is the market activity going on? I mean, time frames, graphs, and we get, and we get what is the institutions, like how much institutions or is there at Tesla stock at present quarter, and we can compare this with previous quarters, and what is the total number of shares the institutions are holding, and what are the top 10 hedge funds which were there in Tesla stock, and what are the top 10 institutions which were there in Tesla stock, and what is the insider transactions in the cells, insider transaction in the sense, what means the company management. I mean, there are two types of directors in the company, like executive director and non-executive director. Like those directors will hold the stake in the company. So here it's like if the management is holding a stake in the company, so it describes the potential, it describes the confidence they have in their company. So it's like, again, if it is sell, it's not a bad thing, because I mean, because I mean, due to expenses, I mean, due to several expenses, I mean, mostly insider transactions will be sell more than buy. So here, I mean, in a word, it describes everything. Like as we had saw earlier. I mean, if an individual wants to invest in a stock, if an NRI, I mean, if an HNI, if they want to invest in the stock, they will invest a very small amount, like some $10,000, lakh, 1 crore, 10 crores, that's it. But if an institution was investing in a stock, or if an hedge fund is investing in a stock, or if any insiders are investing in a stock, or any mutual funds investing in a stock, they will invest a very huge amount. Like you can see, Vanguard index funds. This is the only one index fund, and they had purchased almost 191 lakhs six. I mean, it's not 191 million of shares. It's just one company. That one fund, it had purchased 191 million of shares. I mean, as you can see, Vanguard, it had purchased some 2,43,000. I mean, yeah, I mean 243 million of shares. So as you can see, if any institution is investing in a stock, it will invest in a very huge amount, and that huge volume creates a difference in the stock. So here, so here we can access detailed insights into Form 13F, 13D, and 13G filings. I mean, these are different kind of filings which are submitted directly to Securities and Exchange Commission of USA. And quarterly reports. I mean, it will change on quarter to quarter basis. I mean, we can discover stocks with growing institutional ownership, which can describe a very strong level of confidence. And we have and we have mostly historical data. Like we can check. I mean, in the price history we have. I mean, we can have this feature in the ISR report too. I mean, which is individual statistical report, and we can check the historical data and store. We can store forecast the stock, like the same example which I am taking, Tesla. Uh, so I mean, it can describe the historical data. I mean, by using this data, um by using this data, like we can understand the trends, patterns, and possible price targets. So patterns in the sense, so how we can the stock market will form a pattern in the sense, it just like in the stock market there is one rule, the one universal rule, that the history repeats. In stock market, it's an universal rule that the history will repeat everything. Like the history repeat in the sense, let's say here, here you can see, here, as you can see, the stock is falling. Just for the example, the Apple stock, as you can see, the stock is falling, and suddenly it stopped at this point. Suddenly, if you see, the stock had stopped at this point. So here we should get a doubt. Why did the stock had stopped at this point? I mean, is there any support or everything? I mean, anyone is pushing the stock to go up. Why does it stop specifically at this point only? And here too, why did this stock had specifically had stopped only at this point? So it will defy. So because the history had repeated. So like just for the example here, I mean, if we can draw any line here, I mean, if you check any line here, as you can check here, I mean, we call these points as resistance. I mean, because in stock market, the history repeats. The history repeats. So what happening means, why does the stock had stopped here? So it's because previously to the stock had taken support here many times. Previously to it had happened. So
లేదు మీటింగ్ లో ఉన్నా నెట్ అట్లా 4G
yeah.
వస్తుంది.
So yeah. So here what's happening is, the in
మమ్మీ
stock
దాని
market the
చేస్తాం.
history repeats. In stock market the history repeats every. Okay, so here you can see it had taken support many times. So what does this indicates means, so it had taken in stock market, the history repeats every time. So in ThinkSabio, in our website too, we have some specific patterns, like we have price history, like where the stock is stopping. So, and we have more than moving averages. We call this as moving averages. Moving averages, I mean, simply we can tell like average. Average means we can tell if there are 50 students in a class, and if anyone asks what is the average score in this class, we can average when we compare to all those. We compare all those 50 students and take out the average. Similarly, in a stock too, there are moving averages. So what does this moving averages indicates means, like it will take the, like here we have one DMA, like 1 day moving average, like it takes last 1 day moving average. It's like 5 DMA means it takes last 5 days. Similarly, 200 DMA means it takes last 200 days. So I mean it combines, it takes the last 200 days. Like here, this is 1 day, this is 2nd day, this is 3rd day, this is 4th day, this is 5th day. In this time, it will take last 200 days of last 200 days of candles, like last 200 days of opening price, last 200 days of closing price. I mean, mostly it will take the closing price, last 200 days of closing price of a stock, and it will take out the average value from that. So what does this indicate? Means when such points come, there is a high probability that the stock will take support at those points, because it will create a demand and supply. I mean, because at these points, the demand will increase. I mean, that's what we had told, like in the stock market, the history repeats. So that's what. So here we see, like we can understand the trends, patterns from based on this. I mean, based on this features of ThinkSabio, and we have the, and here. Yeah, and same report we have some fundamental analysis. Like I mean, the most important two analysis to invest in the stock market is fundamental analysis and technical analysis. I mean, in the previous sessions we had discussed about these two topics. Like fundamental analysis in the sense, I mean, fundamental analysis will tell us why should I buy, why should I purchase this stock, and in simple terms, fundamental analysis will tell us why should I purchase this stock. Technical analysis will tell us when should I purchase this stock. Simple. And by using this, I mean, it's like ISO report is like a all-in-one package. So in this, we have quarterly financials. So here, I mean, we can compare the financials. We can compare with every one quarter to quarter basis. So, I mean, in simple words, what does this indicates means how much the company is taking. Like let's say the company, I mean, the purpose of the company, why the company is getting listed in the stock market to raise money from the public. I mean, the purpose for the company to be listed in the stock market is to raise money. So when they are raising the money, so they have to generate some profit. I mean, they have to generate some return on that money. I mean, if they don't generate any return, so I mean, it will be a, I mean, it will go vain. I mean, even for us, I mean, even for the investors and the company, it will go vain. So that's why before investing in the company, everyone, we need to do the fundamental analysis. Like there are some companies which will get listed in the stock market just to decrease their debts, or just to, I mean, there are some companies like where a majority portion of amount will be taken by the management, top level management. So we need to analyze all things, because it's just like for the example, let's say if a movie is, if any movie is making on a budget of 500 crores, and in that some 300 crores itself is taken, I mean, it's not spending on the movie, but taking, but is taking as the remuneration of different people, then it doesn't make sense, right? Like let's say, just for the example, let's take any movie, and in that movie, I mean, almost more than 50% of the budget of that movie is a remuneration of any hero or director, then it doesn't make sense, because it just go in vain, the amount. So similarly in the stock market, we need to do all this analysis. So here, I mean, here we can see the financials. Like we can see how much the company of total revenue in the sense, I mean, from the money the company had raised, how much the company had earned, it is on revenue. But after earning, we need to deduct the tax, we need to deduct interest, and we need to deduct the depreciation, amortization. We call it as a EBITDA, earnings before interest, tax, depreciation, amortization. And after deducting all those, we will get the net income. So gross income in the sense, it is a revenue, like it is an income I got. Like gross income is like we need to deduct, I mean, after deducting the interest, I mean, it is the amount we got, and after deducting everything like I mean, depreciation, amortization, taxes, this is the net income. Net income in the sense final income. So here we can see like here, I mean, and here we call this as top line growth. Total revenue, we call the revenue as top line, and we call the net income as bottom line. And we need to see that the bottom line should increase more than the top line. Top line means what? For the example here, you can see quarter 2022. In the year 2022, you can see 24.318 billion. So it's just like 24.3 billion. From 24.3 billion, I mean the company, from the 24.31 billion to in the last let's say in the last 2 years, the company's revenue had increased by 25.7 billion. So it's just like we can say 1.5 billion the company had increased, whereas the net income had decreased. So like from the 3.7 billion to 2.3 billion, like the net billion had decreased almost by again 1.5 billion. So here what's happening? The top line is increasing by 1.5 billion, but the bottom line is but the bottom line is decreasing by approximately 1.5 billion. So it is somewhat negative for the company, because it's just like the top line is increasing. Top line means in the sense, I mean, it's just like bottom line. I mean, when the bottom line increases more than the top line, then it is a positive for the stock. So here, based on such analysis, we can give some conclusion. So these are the, I mean, we can review here earnings data, moving averages, and volume trends. I mean, on a single dashboard. And we have trending stocks, and here we can see trending stocks. Like here, I mean, here we can identify the top performing stocks with again strong institutional banking, and we have ThinkSabio weekly gems one future. So here TS weekly gems, here what we can see is the stock which had performed the most, I mean, which had performed better in this week, and we have ultimate reports, like ultimate reports in the sense, and it is one of the very best report that the company had. So again, ultimate reports. Okay, what does this ultimate reports indicate means? As you can see, I mean, here there are count shares both. I mean, when I select the board, as you can see in the headline itself, like a report of all institutions, both their counts and shares consistently increased. So what does means? What does this mean? Previously, we had discussed what means 70% of the volume in the market will create by institutions, hedge funds, mutual funds, all this. I mean, it's like I mean, retail investors are very I mean, investors influence in the price change is very less. So so here we can check the, I mean, we can check the quarter. Let's say I had select the sixth quarter. I had select the sixth quarter. So here I can find some stocks. I can find 142 stocks. So what does this means? Means in these 142 stocks, from last 6 quarters in the sense almost from the last 1.5 year, the company, I mean, the institutions are increasing their stake in these companies. So the institutions are increasing their stake in the companies. So it's like, so it will raise the question, as you can see, for the example, AUR company, from 646 million to 1,327 million. It's almost like 12.5x, 11x. It had increased. So here, what does this indicate means? When these institutions are increasing their stake and consistently, so it generates the confidence, like the institutions, like it's I mean, as you can see here, 764 institutions. I mean, as you can see in the Palantir, you can see 1964 institutions. As you can see in this stock, there are 3228 institutions. It means these many institutions are getting invested in the stock. They are showing interest in the stock. So there is something different. I mean, there is something we need to note here. I mean, there is something we need to see, because it's just like the it's just like the example, like in an exam, if we don't know the answer, I mean, for any question, if we don't know the answer, we will just see what the others are. We just copy from the others. I mean, when I don't have clarity on the answer, I will check what the others are doing. I mean, let's say if all others, I mean, if most of the people, like almost more than 80% of the people are selecting C as the correct answer, then obviously there is a high chance that the C will become the correct answer, because it's like a majority of the people, and these are not the normal people like us, because we may not have much knowledge on the stock market, but these are the institutions. Their job itself is to analyze the stock. Their job itself is in the stock market. So there is something, I mean, if such huge people are getting attracted to this stock, then we need to give such stock a special attention. So here in ultimate reports, we filter those stocks with rising institutional interest over multiple quarters. And finally, we have also the options. I mean, in options, we have I mean, we can do the options. Options is just like hedging. Hedging means, in the simple word, let's say, in hedging means, in the simple word, it's like an insurance. I can tell, hedging is just like an insurance. So let's say, just for your example, let's say I need to purchase I need to purchase a rice, like a packet of rice, or rice. I mean, let's say, like, yeah, I need to purchase a packet of gold. You can think of gold, okay? I need to purchase a gold. So let's say I need to purchase 100 grams of gold. So if I go to the shop, so the shop will say, like, okay, the 100 grams of gold is $1,000. Just assume, if the person is saying that the 100 grams of gold is $1,000. So is the $1,000 will be the same? Like, let's say now it is $1,000. Okay. So if I purchase now, after purchasing now, let's say, imagine after 6 months, after 1 year, I need to sell my gold. But at that time, what will I do if the gold value decreases from $1,000 to $800? So it will be a loss of $200 for me, right? So I mean, it's just like, if I'm purchasing a gold now with the intention to sell it after 6 months, so now I will purchase it at the amount of $1,000. But after 2 months, if the value of gold increases to $1,200, more than $1,000, then it's beneficial for me. But if the value of gold decreases less than $1,000, then it is a loss for me. So to hedge, I mean, to protect that loss, we will purchase some options. It's like hedging. We will do some hedging. So it is options. So I mean, we can see the data of options here, options too, on the I mean, we can analyze the data of options too in the ThinkSabio website. And we have Mark Minervini strategy. Like, Mark Minervini is one of the famous American institutional investor, and like, I mean, we can analyze everything like open interest. There are complicated topics like open interest. Open interest, in simple words, how many people are betting the stock will rise, and how many people are betting that the stock will fall. This we call as open interest. So just like, I will show like options. Again, I'm taking the example of Tesla. I mean, you can see option contracts. call contracts, put contracts. So what does this means? These many lots, I mean, here we call as lots. These are not people. Here lots, I mean, or lots are contracts. We can also call it as contracts. So call contracts means these many people are betting. I mean, these many, not people, sorry, these many contracts, these many lots are betting that the stock will raise, that the Tesla will raise. And these many lots or contracts are betting that the stock will fall. So here you can see like the people who bet that the stock will fall is more than the people who bet that the stock will rise. So again, anything will happen. We can't tell what will happen to Tesla tomorrow, what will happen, whether it will rise or it will fall, but it will give us the data. Like, I mean, at this scenario, I mean, for me, it's appearing like the people who are, I mean, the people who bet that I mean, the contracts who bet that the stock will fall is more. So there is a chance that it will fall. But again, the stock market changes in every microsecond. Now the stock market is closed, so the data looks stable. But on the live market, it changes on every microsecond and every second, and the data changes. But here we can get the data, how many people, I mean, how the data, I mean, it will give us some guidance and beneficial, some guidance. So these are some of the important features of ThinkSabio. Now I request Kavya to explain about uh, virtual portfolio and my universe section.
Okay, Tim, you starting?
Yeah, yes. Like now, I request Kavya to
Yeah, can
explain
you
about.
ping her? See if she, because we have time constraints here. I have to
Yeah,
start to right after.
yeah, and yeah, and last we have the I mean, now till now we had discussed everything, right? Till now we had discussed like what is the stock market, like we had discussed what is stock market, why investing in stock market is important, why everything is important. We had saw many futures which guide us to tell which stock is best and which stock is worst. So again, the main question is, uh, like, do I really earn in the stock market? I mean, it is not a normal thing to earn in the stock market, because I will just show the example for you. I mean, as you can see in my screen, okay, I will just log in. I mean, I will just to show you the headlines gives by the SEBI. Like, it's like an complete, yeah, it's like an, I mean, SEBI is just like a head, it's like a head in the stock market. So I will just show you the headlines give by SEBI. Like, in the phone. Okay, like I'm not seeing the code, but still I will.
Okay, that's fine, buddy. Arshad, let's move on. Can Kavya, you
Yes.
take
So
over,
here,
please?
what means the SEBI had, it's like the official, the Securities Exchange Commission and the SEBI, they had officially told that in the stock market, 90% of the people will incur losses. only 10% of the people. It's like only 10% of the people will be in profits. 90% of the people will incur losses in the stock market, and these are the official data given by the SEBI and SEC. So, I mean, it's like, it's how means the losses in the sense, it's not like every day I will get losses. Okay, today I will get a profit of 1,000. Imagine today I will get a profit of 1,000. Tomorrow I will get a profit of 2,000. And 1 week, till 1 week, I will get a profit of 10,000. And till 1 month, I will get a profit of 50,000. But next day, I will lose everything. So that's what the stock market is. So it's like at the end of the day, I mean, okay, I may earn today, I may earn for a few days, but on a long-term basis, on consistent basis, when we see on the consistent basis, the officials are itself, they are warning. I mean, when we open the website, we will get the warning, like, please, like you please notice that 90% of the people, 9 out of 10 people will incur losses in the stock market. Please notice this. So it's like risk taking. So all the stock market, investing in the stock market is a very risky thing. So so it's just like a practice, just like I mean, as I had told earlier. So let's say in a college, there are 60 people. So so if there is an exam, let's say in government exam, I mean, in government exam, if we want to pass in a government exam, everyone, like, there are some lakhs of people who will participate in an exam. But out of those lakhs, out of those millions of people, only let's say only 40%, 30 to 40% will get passed in the exam. Remaining 60 to 70%, they will uh, I mean, they will go home. So why does this happening? It's a practice. It's a consistent practice. So it's like a war in a stock market. Let's see, if I am investing in a stock market, I am with half-baked knowledge. I don't know what is what, what is what. But there are people who are so clever, who have some 10 years of experience, who have some 40 years of experience, who have some n number of experience. So I am fighting myself with those experienced people. I am fighting them. I'm fighting myself with very rich people, very rich people. So it's like war. Just like it's very difficult. So everyone wants to pass in the exam. Everyone wants to become a topper in the college, but not everyone. I mean, but at the end of the day, everyone will not become. So it's like a practice. We need to practice more and more, and we need to be consistent. And at the end of the day, it depends on our persistence, and it depends on how much. I mean, it depends on our consistency and persistence. So for that persistence purpose in ThinkSabio, we have my universe section, virtual portfolio. So it's just like a duplicate money. So it's just like a duplicate money here. Duplicate money in the sense, it's everything will look like an stock market. Everything, I mean, everything will be same. But here, instead of my real money, I am investing my duplicate money. So just like, I mean, now the market is in close, but just for the example, I am searching the Tesla. I am searching the Tesla, and here I'm selecting how many shares I want, and here I will get the price, and I will review order. As you can see, I have funds available of $10,000. Have funds available of $10,000. So here the Tesla share will be bought. Again, it will change tomorrow after the market starts. But here you can see. So by this, what will happen is I can practice. I can practice myself. Like previously, I had invested in the Tesla. You can see. I mean, I had invested $2,000 in the Tesla. I had invested when it was. I mean, when it was $252. As you can see, till now, my profit is $523. My profit till now. Again, the profit was almost more than some $3,000, $4,000. But from as the market is down, the profit had decreased. So here it's like practice. I'm practicing. So I mean, again, here TS watch list we have. I mean, we can keep these stocks in watch list. As you can see, I had kept many stocks on watch list. So here I can see, okay, I can analyze, okay, see, when I had added the, I mean, price when added, when I had added this stock is at 0.35 cents, but now it has 43 cents. So it had increased 23%. So here, I mean, these stocks, APP stock, I had added this at $68, but now it is at $250. So it had generated almost very high return. Say it had generated negative return. So here we can analyze why it is happening. Okay, let's say it's just like if I had invested at that time in app stock, I would have generated 263 percentage of return. But again, if I had invested in OSCR stock, I would have generated 27% of negative returns. So here I can analyze everything. So it's just like a practice. So here, I mean, before it's just like before going into the real world, before going into the real war, I'm practicing myself, I'm perfectioning myself. So here I can know what is happening, why it is happening. So just like for the example, I mean, just for the example purpose, like there are many things which will happen, which will affect the stock. I mean, we can practice all these things here. I mean, there are many things. I mean, there are many things we can't even imagine. I mean, sometimes we don't even understand why the stock is falling, even though everything is perfect. So there are many things we can learn by this analysis. Yeah. So in a word, like with this ThinkSabio website, I mean, it will stand behind us as a guidance. I mean, as I had written a very good quote here, like instead of our spending hours researching, ThinkSabio does the heavy lifting for us. So you can invest smarter and trade with confidence. With this, and I request Sairam sir to please uh, add the valuable guidance.
Yeah, thank you, Arshad, for your valued information session. Can you hear me, team? Hello? Hello?
Yes, sir. Yes, sir.
Yes, sir.
Okay, you can hear me, right? Very clearly?
Yes, sir.
Okay, wonderful. So thank you, Arshad, for covering Kavya in the past sessions. Thank you for both. Um, you covered different aspects, the financial side and stock market side, and things have your features and all good stuff. Okay, so I'll summarize and I'll try to present very quickly in a little bit different fashion so that people with no financial background, I know you're all high schoolers, not yet seen the real world. We'll make it very simple, right? I also started the stock market with no knowledge, and I give one quote that I already mentioned last week. So my always challenge to people is, if you want to board an aircraft, do I need to know the mechanics of the aircraft? Do I need to do an engineering degree to board an aircraft? Absolutely no, right? Because it's not my job. It is the pilot job, and it's the aircraft which needs to do its job. And I just board the aircraft and I watch my Netflix, and you take me to my destination, right? That is the belief system. We repose on the pilot and on the aircraft or in the aircraft. So they will take me. So the same concept we applied here in ThinkSabio by following the smart money. Smart money is nothing but institutions. So what does this institutions consist of? Institutions consist of people like smart people like you, who graduated from Ivy Leagues or who has great certifications in finance degree. All the smart people across the world, these big institutions have recruited them from Harvard or you name it, MIT, Columbia, whatever the universities. So those people, when they joined in these kind of institutions, they obviously exhibit their intelligence, their smartness, their brilliancy. And when they all come together and when they make a financial decision, there could be a reason behind it. Because they have done a lot of due diligence, a lot of research. All smart people come together and discuss. There will be a lot of back and forth arguments, constructive disagreements, constructive agreements. After all this, the management will make a decision. Let's go and buy the stock, whatever the stock is, Tesla, Apple, whatever the name you call it, right? Soundhound or, whatever the stocks we have. So that is the concept we are trying to follow in ThinkSabio. We made it very simple. And as I told you, my example is a classic example. I have no financial degree, no financial background. Even today, I don't know how the PE is calculated, price to earnings ratio. But again, my point is, do I need to know to do the stock market? No. Yet we are playing with multi-million dollars, literally and truly and genuinely. Why this is possible? I say, if you want to do trading or investing, all you need is some knowledge, that what other smart people are doing. That's what I'm learning from ThinkSabio. Second, you need guts. You need to have confidence and courage. When you have someone all this knowledge, you pull with the courage. Yes, I won't take the risk. Again, in risk taking, there are different ways, how you can take it. When you, let's say you started with $100. Let's say you multiply it to $200. That means you have $100 profit. Then you take $100 profit and take some more risks, or you save that $100, go take it back to your bank account and play with this house money. We call it the profit as a house money. Okay. So, and one more point I wanted to make it simplified is, right, in any stock market, right, let's understand the basic things before you understand ThinkSabio, right? Let's say you and I are as an investor, what can we do to a stock? There are only 5 activities we can do, right? There is only 5 activities. Let's say you never had Apple stock, you bought it the first time. Okay, that we will coin it as newly bought. Make a note, Dikshita and other people who is first time listening. So these are the keywords which you need to note down so that you better understand our ThinkSabio website features, because the entire website was driven by these 5 terms, right? So the first one is newly bought. So when you never have a stock and you bought for the first time in your portfolio, you call it newly bought because you never had before. Agree? Let's say now you bought that Tesla stock. Now you wanted to add some more, stocks to Tesla. Let's say you have 100 already. Now you want to add another 20. So that can be called as increased. You already have 100. Now you are increasing to another 25. So the total is now 125. So that term is treated here as increased. So first one we call as newly bought. Second one is increased. So now the third one is, let's say you wanted to reduce from 125 to another 10. Reduce. You want to sell it off for whatever reason. So 125, when you sell 10, now you have 125 minus 10, 115. So that is when you sell it off, you call it, you are reducing your stock. So the third terminology here we introduced is reduce or decrease, whatever you want to call. The first one is newly bought. The second one is increased. The third one is reduced or decreased. The fourth one is, let's say you have a Tesla stock, $100, 100 stocks, but you never touched the stock for one more quarter. That means you did not make any change. That's called no change. That's the fourth one. The fifth one is, I have 100 shares of Tesla I bought last quarter. Today I have a need to pay my school fees or my son's college fees, or I want to buy some gold or whatever. I'm going to sell it off totally. That is called complete sell-off or sell-off. Okay, I sold my 100 stocks. That's called sell-off, sold off, or whatever the terminology. So the 5 keywords which will really you need to understand, because the website is driven by these 5 items or 5 categories. Is that clear for everybody? Dikshit, I know you are the only one. I think the rest is all ThinkSabio team. Sorry, say again.
Yeah, it's clear.
Okay, wonderful. The next one is, then how did ThinkSabio get the frequency of the data? Right? ThinkSabio gets the frequency of the data from SEC website. It's called Security Exchange Commission. That's where everybody will report. Everybody meaning all the institutions which are having 100 and above $1 million, they will report to the government, whatever they are buying. Okay. So the frequency is quarterly and daily. You have to write down the frequency because that's also important to know so that you will better understand things you have your website. Okay. So the quarterly data will be reported in our ThinkSabio. So that is one frequency. Every quarter, right? There are 4 quarters in a year, right? We all know quarter 1, January, February, March, quarter 2, April, May, June, and July, August, September, and October, November, December. There's 4 quarters. Every quarter has 3 months. So what each quarter does is all the institutions, whatever the transactions they have done, all the 5 types we talked, right? So they will report. And ThinkSabio will segregate and will show you what did they do, what is the difference between the last quarter and this quarter, what did they do. Right? That is the feature. So let me share you real quick the screen so you can understand what we are trying to do here, right? You're able to see my screen, correct?
Yeah, yes, sir, we can.
For example, if you go to individual institution report, and let's say my famous institution is Jim Simons. So I'll take Renaissance Technology. Okay, I come to Renaissance Technology and I'll say submit. So another thing, Dikshita, you have to note is every quarter when it is complete, then we will get their data within the 45 days after the quarter completes, right? So right now, Q1 is completed, right? January, February, March is over. So that means Q1 is completed. Now we will start getting the Q1 data in Q2 for 45 days, which is May 15th is the deadline for all the institutions to submit their data. So you always have 1 quarter behind because they won't, the current quarter, right? Q2 is currently running April and May and June. That will conclude Q2. Until Q2 is complete and 45 days is over, we won't get the entire data. So we are always 1 quarter behind. But yet, it will be very useful for us to understand what they have done in Q3 and Q4. You see here, are you able to see my screen?
Yeah.
Okay. So if you look at the example, right? So we wanted to understand what Jim Simons institution, which is a multi-billion dollar in Renaissance Technology, did. So you come here and you'd see the difference between Q3 and Q4. So what did this institution do for PLTR, Palantir Technology Company? What they did do? So they had 38 million shares in quarter 3, but when it comes to quarter 4, it became 22 million. So what does that mean? So they reduced 15 million shares. Or in percentage terms, you look at it, it's 40%, they reduced it. So that's an information for you and for us, Dikshita. You wanted to see what you want to do. I mean, they may have sold it for whatever their reasons. But by looking at this information, you try to conclude because you follow Renaissance Technology. Because he's a MIT, the successful financial institution. Now you decide what you want to do when you see this information. That is why we have here. That's why I explained you the status column, right? So the status column have all these sold off, and different features. 5 features I talked about it, right? For example, here you come here, and let's say in your filter, we have so many filters. Let's say under the status column, you have all these 5. You wanted to see what Renaissance Technology newly bought in the past quarter, so that you know what you want to do, right? So this example will give you what Renaissance Technology bought during Q4, quarter 4 last, right? October, November, December. So this guy invested into United Healthcare, Johnson & Johnson, Shopify, Newmont Corporation, and so on and so forth. And if you look at NEM, Newmont, which is nothing but they are the company which produces gold-related materials and all. And really, they made a smart decision because since they bought, and it really went up around 30% or 40%. That's a smart decision. That's all we are trying to learn from these smart people. What did they invest, or where did they invest? So those five attributes which we talked will help you a lot to better understand what others are doing. Is that clear?
Yes.
Okay, very good. So the second frequency of the data is every day institutions will also report what they bought about 5% or above from a company stake. Say, for example, you bought 5% stake in Tesla. So by law, you are required to inform to the SEC that you have to disclose your what you bought in Tesla. That's the law, because you bought 5% or above, right? So that's the public information that one has to know. Well, Diksha bought 5% in Tesla, right? So that people will understand who owns and that person, because it's 5% and above. That's the rule. That's the rule set by SEC. Okay. So those are the key things to underline. ThinkSabio gets data from SEC in two frequencies. One quarterly, the other one is daily. So when you get the daily, meaning the institution whichever reported today must have done the transaction 10 days ago. 10 days ago. Okay. And when they bought 5% or above. Second frequency is quarterly. Whenever the quarter is complete, institutions have to report within 45 days after the quarter complete. A very good example is January, February, March is just complete, right? Q1 is done. And starting from April, institutions will start submitting their data. And how many days do they have? 45 days. When will it complete? On May 14 or May 15. So May 15th is the deadline for all the institutions which have registered with SEC must report what they did for their stock portfolio. And once they report, we'll try to present it in 5 different items I just mentioned, right? Reduced, increased, sold off, and newly bought, or no change. That is what we do. Okay. So that's the high level. I think that's good information for you to start off. And I think going forward, when you come to ThinkSabio internship, you learn more. I'll put an end here because we can't, have too many things to grasp at one shot. So this is a good ending, I would say. And you can further explore Diksha in your free time. It's very interesting finance. As I said, there is a lot of money, a lot of wealth one can build if you make the right choices. If you don't do the right choices, you will lose the money too. Right? Losing the money is nothing but how do we lose money, right? In the stock market, how do one lose money? Only when you buy high. Let's say you buy for $100 and you are selling for $50. That means you are selling for loss. So how do one make money? When you buy low, the price when it is low, and then when you sell it high, that's where you make the money. Simple logic, right? You bought a pen for $10, you sold for $15. That means you made $5 profit on the pen. And you bought pen for $10 and you sold for whatever reason $8. That means you took a loss of $2. Listen, nothing but simple common sense. You buy and sell, buy high, buy low, sell high. Is nothing but your strategy to make wealth in the stock market. If you look at these Berkshire Hathaway and all these people, they bought Tesla, for example, when it is $5, for example. Now Tesla is trading at $250. So you make the tons of money or astronomical money. So the key is investing at early stages and staying long enough on a good company. So you make a very good fortune. You make very good, wealth when you stay long. Depends on the companies which you are choosing. Okay, that's all I have, team. I will put an end right here. So any questions, comments, any suggestions? I know you are the only one, Dikshita, and